Welcome back to the Deep Dive, where we tear through the research you shared with us so you can walk away feeling not just informed, but confident. Today, we are strapping in for a deep dive into PharmaResearch, that stock ticker 214450.KQ. And we're tackling a massive question that securities analysts are posing, which is this company truly on the verge of becoming the new master of global aesthetics?
That phrase, it's a serious claim, but when you really look beneath the hood, the sources suggest a transformation unlike anything we've seen in this market for a while. We're looking at a Korean company right now sitting at a 5.05 trillion won market cap, trading around, 486,500 won per share as of early 2026. So our mission today is really to analyze this unique synergy that's driving the whole narrative. Analysts have kind of crystallized it as the combination of CVC Capital and DOT technology.
Okay, let's jump right into the money side of that synergy, because that's where the story gets really interesting, like immediately. We're not talking about slow, incremental growth here. The analyst forecasts are projecting margin levels that honestly feel unprecedented in such a competitive space.
Oh, they're projecting top-tier, globally elite performance. If you look at the financials, the ones compiled in the Naver consensus, the operating profit margin, the OPM, is forecast to move from 36% in 2024 to an estimated 41.5% in 2025.
A 5-point jump in 1 year.
Exactly. And then it climbs a little higher to 42.6% in 2026. For you, the listener, understanding how a company can even sustain a 40+% OPM globally, well, that's the key to this entire deep dive.
Right, because most major players would be thrilled to consistently hit the mid-30s.
Absolutely.
Okay, let's unpack that. That jump, that 5-point jump for 2025, it's driven almost entirely by operational changes, not just selling more stuff. And that is what we mean when we talk about a quality of earnings shift. So if CVC Capital is the strategic giant in this equation, we need to understand who they are and why they are willing to underwrite that kind of massive shift.
Well, CVC Capital Partners is not a minor player. They are Europe's largest private equity fund and the fourth largest globally. We're talking an AUM assets under management of over $200 billion. And crucially, they are not passive shareholders just providing cash. They invested about 400 billion won. They're the second largest shareholder, and they operate under a joint management system with Chairman Jung Sang-soo.
So they are at the table, they have real skin in the game.
They're fundamentally integrated into the company's decision-making, yes.
But, private equity firms invest all over the place. What makes their expertise so specific to mastering the aesthetics market?
And that's the strategic brilliance of this whole partnership. CVC specializes heavily in healthcare and beauty. They have the battle scars and the success stories to prove it. The sources all highlight that they previously held a big stake in MERS.
The company behind Ulthera.
The very one. The globally recognized leader. That history gives CVC this, world-class specific knowledge on how to scale a high-margin aesthetics company, how to handle the licensing, and this is the most important part, how to build and integrate global distribution networks.
So it's not their first rodeo. The sources suggest this history is the key to their confidence. But if CVC knows how to scale, let's look at how quickly the analysts think this will translate into those crazy earnings.
Well, CVC's role is defined as being the strategic partner. So they're responsible for integrating distribution and pushing through all those crucial overseas licenses. They don't just sit and wait. They are actively driving this operational shift.
So if CVC is the brain, then the cash flow is the nervous system. How fast does that network translate into those margin expectations we were talking about?
Let's go back to the hard numbers. The 2024 OPM of 36% was already very strong, driven by their existing distributor deals. But the 2025 estimate jumps straight to 41.5%. And the core reason cited is the overseas direct sales conversion, which is all powered by the CVC network, happening right as European sales kick off.
Okay, so that pivot is what's expected to stabilize them at that 42% plus elite level by 2026.
That's the plan.
But wait a second. If they're successfully converting distributor sales to direct sales and basically capturing the distributor's margin, why won't competitors just immediately undercut them on price in Europe? Is CVC's network really strong enough to hold those high prices?
That's where the unique competitive moat comes in. It's what CVC recognized in the first place. The margin increase isn't just about efficiency. It's about brand pricing power that is built on proprietary technology. If the tech were easy to copy, you're right, the margins would just erode. But the sources are clear that Rejuran has already established premium pricing because it works. CVC just lets them capture the full price potential by cutting out the middleman.
That makes sense. That kind of margin power has to be built on something competitors can't just replicate. Which brings us right to their science. Let's talk about DOT technology.
DOT is their foundational IP. It stands for DNA optimizing technology. And at a high level, it's a technique they use to precisely cut salmon DNA.
Salmon DNA. Why salmon?
Because it's highly similar to human DNA. Our cells recognize it, they absorb it really easily.
But why the need for precision cutting? Why does the size of the fragment matter so much?
The sources are pretty specific on this. The precision is everything because it optimizes the DNA fragments into the perfect size for skin absorption and for biological signaling. If the fragments are too big, they just sit on the surface. Too small, and they might not do much for structural support. DOT makes sure the fragments are, biologically optimized to get the exact regeneration response they want.
So that's the valuable IP. It's not just a simple mechanical process.
Exactly.
And this process creates two different materials that are the basis for their entire product portfolio, PDRN and PN. Let's make sure we clarify the difference for everyone listening.
Right. So PDRN is polydeoxyribonucleotide. Think of these as the short functional fragments. They're mainly used in pharmaceuticals for really targeted things like wound healing or reducing inflammation. The drug Placentex is a good example.
Okay, short fragments.
And PN, or polynucleotide, that's the long chains. Because they're longer, they create a much higher viscosity, more structural integrity. This is the material for the medical devices like Rejuran.
So PN is more for structure.
Right. It's optimized not just for healing, but for deep skin support and long-term elasticity. It's the structural stuff.
Okay, so short healing PDRN and long structural PN. How does this translate into their three main revenue pillars?
Their revenue is very intentionally structured for both stability and growth. The first pillar, the core profit engine, is medical devices. That's about 52% of their revenue. And this includes their famous aesthetic filler, Rejuran, used as a skin booster and for wrinkle improvement.
And the second part of that medical device pillar is Conjurin.
Exactly. Conjurin is the PN-based product used as an intra-articular injection.
We should probably explain that term. It's a bit technical.
It's just a procedure where the PN material is injected directly into the joint space, between the bones. It's typically for cartilage regeneration and pain relief for patients with osteoarthritis.
And that's becoming a huge deal in aging societies.
An essential medicine, really.
Let's stick with Conjurin for a moment. It often gets overshadowed by the flashy, aesthetics of Rejuran, but our sources call it a stable cash cow. How stable are we talking?
It's the company's financial bedrock, their annuity payment, really. Conjurin consistently generates over $10 billion in quarterly operating profit. It's a dominant force, holding about 40% of the domestic market share. And the demand is it's robust. Because no matter what aesthetic trends are doing, people's joints get older, it provides this crucial financial stability.
That context makes it so much clearer why the company is so resilient. Okay, moving to pillar 2, cosmetics. 35% of revenue, and this is the high growth driver, the Rejuran cosmetic line.
Right, based on the PDRN healing fragments, these products are what you'd call dermacosmetics, so they combine the safety focus of dermatology with the function benefits of cosmetics. They're designed to maintain the effects of the in-clinic procedures at home.
And finally, the last 13% is pharmaceuticals. That includes the PDRN drugs and Rentox, their own botulinum toxin, a really comprehensive portfolio from just that one salmon DNA source. So let's dive deeper into the aesthetics golden child, Rejuran. It's already #1 in Korea. It's a household name in parts of Asia. But how is this CVC synergy fundamentally changing its trajectory in Europe?
This is the absolute crux of that 2025 OPM jump we talked about. The CVC network is enabling this sharp strategic shift in key European markets, Germany, the UK, France. They're moving away from relying on a middleman distributor to direct sales, as they say in Korea.
And the implication of that is?
Instantaneous margin capture. When you cut out the distributor, that cost just vanishes from your P&L, but the premium price that Rejuran commands, that stays.
So it's not just about selling more units. It's making way more money on every single unit they sell. A simultaneous price increase and margin improvement. That totally changes the quality of their foreign earnings.
Precisely. It's an execution story. They're using CVC's existing infrastructure to pivot and capture that value immediately. But I have to say, the maximum key factor for their long-term valuation is still the North American FDA approval. That's expected around 2026, and it's the true test of global scale.
Let's swing back to cosmetics, the fast-moving growth engine. The sources highlight this really critical virtuous cycle that binds the two sides of the business together.
And that cycle is just essential for brand loyalty. A customer gets a Rejuran procedure in a clinic, they experience this powerful regenerative effect, and then they're highly motivated to buy the PDRN-based cosmetic line for home use to prolong and enhance the results. It drives huge consumer confidence. It's made the line a top seller at places like Olive Young.
And because cosmetics face fewer regulatory hurdles, their global expansion can be incredibly fast. They don't have to wait for an FDA approval to launch in a new market.
That's the huge advantage. The forecast is for rapid growth through global platforms like Amazon in the US and Quo10 in Japan. Some analysts are even predicting that, because of this speed, the revenue share from cosmetics could eventually reach parity with medical devices.
And what about the pharmaceuticals segment with Rentox? Are they just selling that as a standalone toxin?
No, the strategy is much smarter. It's all centered on using Rentox and Rejuran plus toxin package sales, especially in Southeast Asia. It lets them bundle products, boost market share for their whole portfolio, and give practitioners a sort of turnkey solution. It acts as a powerful plus alpha factor that raises the company's valuation multiple.
Right, they become a comprehensive solution provider, not just a device maker.
You got it.
Okay, if you're an aesthetic practitioner or just a curious investor, you have to understand where Rejuran sits competitively. We're seeing a lot of buzz around other products, like PLA products such as Look. How does Rejuran's PN stack up?
They're generally seen as complementary, really. They serve different needs. Rejuran uses PN for fundamental regeneration, elasticity, overall skin health. PLA products like Look are more for inducing your own collagen production for specific issues like volume loss or pores.
And they target different demographics, right?
Absolutely.
Yeah.
Rejuran is highly preferred by the 40 and 50 plus crowd who want foundational skin repair. Look is often preferred by people in their 20s and 30s who are looking for more natural, subtle filling and volume. But what's fascinating here is the macro trend. The whole aesthetic market is shifting decisively away from procedures focused just on artificial volume.
The pillow face era.
Exactly. And it's moving towards improving skin quality, so texture, glow, fundamental health. And this shift fundamentally reinforces Rejuran's market dominance.
Speaking of dominance, the sources mention its position in the inbound tourism sector. It's become a huge driver for visitors to Korea.
Oh, Rejuran is cemented as a must-have procedure for international visitors. Its brand is so strong that even with VAT refund policies, it faces very low price resistance. People are literally traveling to Korea specifically for this product.
That's the ultimate sign of brand power.
It really is.
Okay, let's quickly touch on the stock's volatility. There was a notable decline back in 2024, but then a major rebound in January of 2026. What drove that financial whiplash?
The 2024 decline was pretty typical market behavior. You had material exhaustion after the huge CVC investment news, some competitor concerns, and just short-term profit-taking.
People wanted results yesterday.
Right. The January 2026 rebound, though, was all about proof of performance. Record monthly export data came out, and it confirmed that the European direct sales conversion was working. The margin effect was materializing in the actual numbers. So that visible export data now provides a really strong, quantifiable floor for the stock.
All right, let's look at the ultimate endgame here, the exit strategy. This is where CVC's involvement becomes an even bigger story. The sources talk about a potential NASDAQ listing.
So while this isn't an officially confirmed strategy, if you look at CVC's history, their playbook with companies like Mer's NASDAQ listing is a highly likely card for their final exit. And if you connect this to the bigger picture, the timeline for this outcome would be around 2026 or 2027. That timing is no accident.
It's designed to coincide with.
Precisely. It's when North American sales are expected to become significant, proving the company's global scale to the biggest audience possible.
Which brings us full circle to the analyst consensus. Now that the CVC network is clearly working, what are the experts saying?
The consensus is overwhelmingly positive. It's buy ratings across the board. Shanahan Investment explicitly said an OPM over 40% is globally top tier and that the stock is likely undervalued. Mary Asset specifically cited the CVC network and raised their target price to $700,001.
That was a masterful deep dive. Before we wrap, the analysts left us with that really memorable phrase, the salmon on the shoulders of a giant aiming for the world. And we've seen that balance. Medical devices, led by Rejuran, driving the profit and brand power, and the cosmetics pillar providing that rapid global growth.
And what's so fascinating is that the financial stability from Condran, that quiet cash machine, is what allows the whole aesthetics business to succeed. You combine that with the proven success of the European direct sales conversion, and it fundamentally changes their earning narrative. The market is now viewing Rejuran's brand as strong enough to start replacing traditional cosmetics in the global duty-free shopping story.
So what does this all mean for you, the learner, watching this journey unfold?
Well, if we connect it all to the bigger picture, the company has executed the capital and tech strategy perfectly so far. But their ultimate long-term success and the likelihood of that really profitable NASDAQ exit, it all hinges on getting past that final regulatory hurdle. They've proven the European pivot works, but the maximum key factor is still that major 2026 North American FDA approval. And that raises the ultimate question. Can even the world's best brand, a true salmon on the shoulders of a giant, successfully navigate the North American regulatory gauntlet to dominate the largest aesthetic market in the world? That is the ultimate test, and it's something for you to mull over until our next deep dive.